Hey everybody, Smart Silver Stacker here. It is Monday, April 25th, 2022, and it is a rough start to the markets this week. Stocks down across the board. Looks like the NASDAQ ticking slightly into the green just in the past couple minutes, but other than that, all the major stock indexes down. Crude oil is down in a big way, down over $5. 5.27%. Other commodities are experiencing the same kind of pain. Gold and silver both taking big hits. Gold down back under 1900 bucks. Silver down almost 3% on the day. And of course, this is after they already had a rough day on Friday. So, what accounts for this big price drop that we're seeing in assets across the board and specifically in precious metals? Well, there's two stories that seem to be the main drivers today. We've got these stories out of China about COVID lockdowns, COVID numbers continuing to skyrocket in China despite their aggressive lockdowns. Those lockdowns are getting even tighter. Now they're installing metal barriers in Shanghai to seal off the streets and to block access to residential buildings. They're putting in these metal mesh barriers to keep anybody inside of buildings where there has been a positive COVID test. And in order to leave your home in Shanghai, now you need a negative PCR test just to get out of your house. Grocery stores are closed there, so people are basically stuck in their homes dependent on government deliveries of the necessities of life. And, needless to say, people aren't really going to work. So all the factories are closed, the economy is shut down, and China plays a massive role in global supply chains and in the global economy. They manufacture a lot of stuff there that the rest of the world uses and buys. So if these lockdowns continue for a prolonged period of time, they are going to have a real detrimental effect on supply chains and on the global economy. And then the other story was based on this speech that Jerome Powell gave last week at the IMF. He's saying that there could be a 50 basis point increase in the federal funds rate at the Fed meeting coming up in May. This is being portrayed as this massively hawkish move by the Fed. I don't think I would agree with that. I think when you have inflation of 8.5% year over year and you have a producer price index of over 11% year over year, the idea that a 50 basis point increase in the federal funds rate is going to put a dent in that is a little bit crazy, but that seems to be what people are thinking. And I would like to point out that we're seeing markets tumble on this news, but it's not like the Fed has actually raised rates yet. They're just talking about raising rates, and by a relatively trifling amount, half of 1%. And yet that is enough to cause assets to pull back. And I think that this is really indicative of just how dependent the increase in asset prices and the so-called economic recovery that we've had, how dependent that has been on Fed monetary policy, where just the mere mention of a tightening is going to cause asset prices to tumble and pull back. Now, I do want to put all of this in context, because when the Fed says things, Jerome Powell's talking about getting aggressive on inflation now. He's saying the Fed is going to be able to get that under control. I want to put it into context, these claims made by the Fed. So here's one from back in March 21st, so a little over a month ago, and Powell was saying that inflation is much too high and the Fed will take the necessary steps to address that. And I guess to him, the necessary steps to get inflation under control is a half of a percentage point increase in the federal funds rate. Of course, if we look at historically what it takes to get inflation like this under control, we see what Paul Volcker had to do back in 1979, which was increase the federal funds rate to almost 20%. So a massive increase in the federal funds rate. And that was actually able to tame that inflation that they were experiencing back then. Let's put this into a little bit more context. So here was something Jerome Powell was saying almost a year ago, back on July 15th of 2021. And that was that inflation was transitory. And, that was a narrative that Powell stuck with for, I feel like maybe about a year. He was saying that inflation was transitory. And that was as we continued to see the monthly year over year numbers increase, and he kept saying, oh, it's transitory. We'll get it under control. No worries. And here we are in 2022, and we've got 8.5% year over year inflation. Obviously it was not transitory. When the economy is addicted to easy money, and a reversal by the Fed means the popping of the asset bubbles that they had inflated, and basically the narrative of an economic recovery going bye-bye, it makes sense that he was saying inflation was transitory, because if inflation wasn't transitory back then, how could he justify keeping rates as low as the Fed did for so long, and as they're continuing to do. But just a little more historical context about how the Fed tends to get things wrong. Here is an article from back in May of 2007, and this is when Ben Bernanke was the Federal Reserve Chairman. Back then, he was saying that the subprime mortgage won't seriously hurt the economy and that all of that was contained. We know how all of that played out, so it's not like the Fed has a great track record of predicting things or of making accurate statements. So I just think that it's important to keep this in mind, these kind of previous statements by the Fed, when Jerome Powell is coming out and saying that the Fed is going to get inflation under control, because I'm here to tell you that unless they get very serious about the increases in the federal funds rate, inflation is not going to get under control. And there's no way that Jerome Powell can raise interest rates to a level necessary to get inflation under control because, one, it'll destroy the asset bubbles that they've inflated, and also, the U.S. federal government is $30 trillion in debt. So you can't raise interest rates that high when you have that kind of debt levels. It's just not possible. The only way to get interest rates that high would be for the federal government to implement massive austerity programs, to slash Social Security, to slash Medicare, to slash the defense budget, because otherwise, with a $30 trillion debt, you raise interest rates up to, let's say 10%, well, suddenly debt service becomes the biggest item in the national budget. So, the Fed is stuck here and they're not going to be able to get inflation under control. But, there are some folks in international finance who kind of understand the problem that we're facing. There was an event hosted by CNBC last week, and there were some interesting comments by this IMF director, Kristalina Georgieva, and she said, "I think we are not paying sufficient attention to the law of unintended consequences. We take decisions with an objective in mind and rarely think through what may happen that is not our objective, and then we wrestle with the impact of it. Take any decision that is a massive decision, like the decision that we need to spend to support the economy. At that time, we did recognize that maybe too much money in circulation and too few goods, but didn't really quite think through the consequence in a way that upfront would have informed better what we do." Right. So yeah, who would have thought that in 2020, when you're creating massive amounts of fiat currency and distributing it to people and basically paying people to stay home and not be a part of the economy, not produce goods and services, who could see that that would lead to an increase in prices? I do just want to point out that I think today's pullback in the price of gold and silver is really an opportunity for investors, because the reality is that inflation is not going anywhere. The price of commodities is going to go much higher across the board. And, this pullback could get a little bit worse, of course, so it's always a good idea to keep some dry powder handy. But I think that there are lots of sales today in physical metals, also in the miners, gold and silver miners. I think there's a lot of value there. So I'm going to be looking for deals on that. None of this is financial advice. I'm just telling you guys my thoughts. But, I think that we're all very fortunate that we're getting this pullback in the price of metals, because what is to come is more inflation. And, if we see stocks drop in a big way, if we see equities pull back, if we see the bubble that the Fed has inflated over the past 2 years really start to get threatened, I have no doubt that the Fed is going to reverse policy and create more money, more fiat currency, and they're going to try to reinflate those bubbles. And, prices in stocks, they may go up in nominal terms when the Fed does that. But I think in real terms, when compared to real money, gold and silver, stocks are going to be falling, at least most stocks. Like I said, I do think there is some value in the miners, and also, in commodity-based stocks. Energy stocks are probably going to be moving much higher. JP Morgan last week was saying that we could see the price of crude oil go up to 185 if we see a embargo against Russia. So that's still in the works. There's still lots of factors at play which will be driving the price of commodities much higher moving forward. And, speaking of that, one commodity that is going to go up a lot is food across the board, I believe. Last week, Indonesia announced that they would be banning the export of palm oil, and they are the world's largest producer and exporter of palm oil. And this type of food protectionism, basically what Indonesia is doing here is they want their food that they produce to be available for domestic markets. And of course, when food becomes scarce, governments don't like that, because that is when people become unruly. So I think we may see more food protectionism around the world as food producing countries start to hoard that food for their own domestic populations. And then countries that don't produce food, there's some that are going to be in real trouble. Like, look at Egypt. They've got like a 3-month supply of food or something like that stockpiled, and, they import a ton of food. So there's going to be a lot of disturbances worldwide as a result of things like this. And it's not just palm oil. I mean, this is not isolated palm oil by any means. Here's another headline that came out on Friday. Tesco, so that's a big supermarket over in the UK, they're going to begin rationing cooking oil purchases because, Ukraine is a major producer of sunflower oil. They're actually the world's biggest exporter of sunflower oil. They produce 46% of the world's sunflower and safflower oil supply. So these cooking oils are going to be in short supply, and this is not going to remain isolated to these individual products, because what will happen as the price of, say, palm oil increases, companies that are using palm oil to manufacture their food products, they're going to start looking around for other things, and they're going to begin bidding up the price of substitute oils. And the same goes for sunflower oil. If sunflower oil becomes too expensive for a food manufacturer to use, they will start looking for other things. Maybe they'll begin to bid up soybean oil or canola oil. There's going to be increases across the board. So not only is silver on sale today, but I do think that food, although, food is more expensive than it was last year, I think it's going to be a lot more expensive a year from now. So it's a good time to be stocking up on non-perishable foods because, you can't eat gold and silver. What do you think about the Fed and its 0.5 percentage point increase? Is that going to be enough to get inflation under control? I'd love to hear what you have to say. Are you stacking up food? Let me know what you're stacking in the comments down below. And if you enjoyed this video and you'd like to see more videos about gold, silver, food, the economy, check out the videos that are popping up on your screen right now, and I will catch you next time. Thank you all very much for watching. Smart Silver Stacker, out.